All right, I thought it was a little bit easier to make a short little video to explain what my investigation into this topic found, so that I can add together all of this in one video, the documentation, and explaining where I'm looking on the documentation as I'm talking. So I phoned SARS, which also confirmed the outcome of this gathering of resources, that the UIF should not be deducted before the calculation of income tax. So this was my question of my investigation. I said I need to find out before I change what I taught my kids. So the UIF, I wanted to know, should it be deducted from the taxable income together with pension fund before calculating income tax, and therefore resulting in a lower income tax payable by the taxpayer. So the contribution, we want to know, does the contribution to UIF get deducted as a tax deductible deduction before we calculate it? So I will come back to this page at the end. There was just also a little bit of confusion that was created by the internet, because when you search something like this, it states that UIF is not taxable. Okay, and that means not necessarily that the contributions is not taxable. We need to take in consideration that there's two components of UIF: the monthly contribution made by the taxpayer, as well as the benefit that pays out when claimed. So some people in their life might never claim from UIF if they're blessed to never lose their job, or for whatever reason that's maybe none of their fault. So after speaking to the lady at the SARS call center that is working with Pay As You Earn and UIF, she also confirmed for me that this statement that UIF is not taxable is not applicable to the contributions, but only to the benefit. When a person is already in need and they claim from UIF, that amount that gets paid out to them will not be taxed. But that does not mean that the contributions paid to UIF every month is deductible for tax calculation purposes. All right, now to the documentation that was gathered. I have two calculations here. One where the UIF was deducted together with pension fund in the beginning of or before calculating income tax, and the other one where the UIF was not deducted before calculating income tax. Right, so I know this is fairly small, so I will be zooming in quite a bit when I'm speaking of the specific amounts, and pointing it out when I'm speaking of that specific amount. All right, so this was two calculations done by Sage Payroll, which is the actual programming that the tax consultant or the tax practitioner that I went to visit specifically use herself and have been using for 14 years. And we also used a specific person, an actual person, and their income. I just blotted out their personal information for privacy purposes. So it's an actual client of this person that approved us using their information and logging onto their e-filing to get this information. So what we did is we worked out the calculation according to the programming, the payroll programming, that how it is calculated, compared it with the SARS e-filing profile and the RP5 as it is given on the e-filing, with the information on the deductions and everything included. So we compared that, and when we did that, this calculation on this side corresponded with SARS e-filing amounts. Okay, so the amount of tax calculated by this calculation this side corresponded with SARS e-filing, and therefore we consider that is the way that SARS would do it. All right, and this is the one where UIF is not a deductible deduction. All right, so I'm going to zoom in just to show you what I was speaking about now. So I'm zooming in quite a bit so that you can properly see. So here it states the pay-as-you-earn due for the period is 109,909 Rand approximately. All right, so if you go to the SARS, you see this is the SARS IRP5 as calculated on the e-filing of this person. There you see that this amount is the same. All right, so that's why I'm saying that this is the correct calculation. And for tax purposes, there was a deduction, a tax deduction of the amount 14,648. So that was the amount contributed to a pension fund that was as a deduction. Right, but if we take the amount that was contributed to UIF by this person for the year is this 3,569 Rand. So if I take this amount and add it to that 14,000, just to test if the UIF, meaning could be deducted in a similar way than pension fund would be, meaning before the calculation of tax, then these two will result in a bigger amount, which is a deduction of then 18,217 Rand and 28 cents. So if we deduct the UIF together with the pension fund before calculating the income tax, you will also see now here that this amount calculated as the pay-as-you-earn for the period is too little. It doesn't correspond anymore with the SARS website or the SARS e-filing amount, which is 109,000. So it indicates to me that SARS is not deducting the UIF before the calculation of the income tax. Yes, UIF is deducted on one's payslip. It is true that it is deducted, but it's not deducted for tax calculation purposes. Okay? So it's just another deduction on one's salary, but it doesn't affect your taxable income. It's not deducted beforehand. So here is also the IRP5 as calculated by the Sage VIP payroll. So for the tax practitioner, then in conclusion, wrote this, where she said, not the same as calculated by SARS, therefore UIF was never to be deducted as a tax deductible deduction before the calculation of income tax. I think we can agree that if the calculation corresponds with SARS calculation, we can agree that that should be the correct way to calculate the income tax. So if we come back to the question of should it be deducted beforehand, I can say with a little bit more assurance that the answer should be no. It should not be deducted before the calculation of income tax, therefore resulting in a lower income tax payable. And this, all that I showed here as well, was confirmed telephonically with a consultant from tax call center, which she also explained that you cannot deduct the UIF beforehand. before you calculate your income tax. So I hope this brings some clarity to the situation, that we can just make sure that we teach our kids correctly. I know I was unsure after the whole confusing conversation, and I just wanted to make sure that I teach my kids right. So I hope this helps.